morning and good afternoon, depending what time you're watching this webinar. But the idea is just to send out a short 5-minute video to my clients who've got the super under management with me and give a market update. As you're using PAC Capital, I thought it wouldn't be anything better than getting the Chief Investment Officer themselves and Clayton Larkham to come online and give us a bit of a market wrap up on where he sees we are at the moment. And I guess for a lot of people to see Clayton for the first time and actually put a face to the name and the person that's actually looking after your funds. So I'd like to introduce Clayton Larkham from PAC Capital. Welcome, Clayton, and thank you for your time today.
And mate, great to be here. You know, I've known you for the last couple of years and AssetZ and what you're doing there in South Australia. And as you touched on before, I've met a few of your investors and clients over time, but there seems to be more and more these days. So great to do this whenever you need me. We're planning on jumping on this however often as you need. But it'd be great to sort of touch in with you about portfolios, markets, any questions you want, fire away at me and happy to have a chat.
All right, thank you, Clay. We'll get stuck into it. Obviously, there's been a huge amount of talk around recessions at the moment. There's increasing interest rates. How do you see this playing out between now and the end of the year, and how are we positioned from a portfolio point of view?
Yeah, look, it's definitely something that, you know, it's on every news media that we see. It's on every, you know, live AFR article, and it is this recession topic. And let me get this clear, like it is on the forefront of our minds. And do we think there's a significant recession coming in the short term? No, but are we less optimistic at the moment than we were at the end of last year? Yes. So what we've seen is there's been some essentially cracks starting to form around the world. We've seen a few things that have happened recently. You know, we've all seen the Silicon Valley Bank and obviously Credit Suisse. Like, they are huge institutions that are under pressure and have essentially folded. Now, I don't think that necessarily means this recession's on the way, but what it means is cracks are forming. And, you know, and that's something that we need to identify. Where do we place investors' money and life, you know, and superannuation savings in front of risky topics, or do we take a bit more out and put in some fixed income and start to see how this next phase plays out? So that is sort of what we're doing at the moment, Paul. To answer your question, I think it's going to be a bumpy year end. Do I think there is a hard recession coming? I don't think it's coming in the short term in the next 3 months, but I'm more wary on how the year looks by year end. So I'll finish on that because I hopefully want to get through a few other questions today. But, you know, I'll finish on the fact that at PAC Capital, which we have an in-house risk signaling system called the PAC Risk Signals, the PRS system. And that is essentially a system that we input this huge amount of data weekly, and every month it spits out some actually mathematical conclusions to how much risk we should be adding to portfolios or taking money away. And, you know, at the start of the year, it provided us with some data that we should be taking a little bit more risk off the table. So that's how we see it.
Yeah, excellent. Thank you. It's a tough year, that's for sure. From the fortnightly updates that I get sent through and I send out to my client base, I know PAC have been a little bit more optimistic towards the end of the year regarding the economic situation, but what is your current view, and what have been the triggers or events in this first quarter that may have impacted your view for the rest of the year? And you mentioned before the Silicon Valley and the Credit Suisse, but obviously there are other concerns as well.
Yeah, no, that's right, Paul. And yeah, that sort of fortnightly update we give to you and your investors there, you know, that sort of touches on, we have been more optimistic last year. We thought we were going to come out of this better. We thought the central banks would stop raising rates and inflation would slow down. But at the start of this year, there was a significant what's called a print, which is essentially the government telling us how inflation is going. And it surprised us by not slowing down as much as we thought. Now, that's a red flag for me. That's a red flag for all of our analysts and portfolio managers here. That the recovery is not happening as quickly as we thought. And, that's a big economic indicator. And I touched on it before that, the Silicon Valley Bank or even Credit Suisse, these are massive institutions around the world that have come under pressure. This is not a local regional bank. Like, these are multi-billion-dollar banks that have now folded. Now, that for me is a massive indicator and a red flag for me. And that has also led to us identifying there's been some market technicals that have started to break down. And by that, sounds a complicated word, really, but it's essentially us saying that the economy doesn't look as rosy for growth. There's a bit more of a weakening growth outlook for us for the course of the year. So that's why we're less optimistic.
Another question for you, which comes up quite a bit for me. Is there an advantage in being a smaller fund in size? Like, and I know there's obviously a lot of money under management there, but in size compared to a Host Plus or an Australian super, they've got billions and billions of dollars that they've got to invest. Is there an advantage to yourself in PAC Capital of having a smaller, more agile sort of fund to work with? Does that help in any way with the performance? Is that helping you outperform the market as such?
It definitely does, really, and we've outperformed the market for the past 3 years consistently, and even though our business continues to grow, and now we have closer to 500 million here under management, and like that is a big number. Don't get me wrong, but you are talking about the names you mentioned, Host Plus or Australian Super, that have, I think Australian Super is almost $1 trillion now. So they're a very different beast. And, the access to things that I can get is very different. But I think there's a more important answer to your question there. Just because we are a smaller fund manager in Australia, we have the same process and rigor that Australian Super and Host Plus does. Like, we have an external custodian, which is our trustees, which is equity trustees. Then we have Citibank, which manages all the funds. So just the same structure that Host Plus does or anything else, we have to have the same framework. So that's a really important fact to know that the same structure is there as in PAC Capital. But to answer your question about the investments, they sort of all interlink, because even though there's the same structure with how secure your assets are, there is a more nimble structure in the fact that we can get access to things that essentially big institutions can't. And we're very proactive, not reactive to things happening. So let's say that there is, like, this Silicon Valley bank collapse or more, or that inflation number that I touched on before, that next week we had an investment committee meeting. We made an immediate change to portfolios and took 5 to 7% out of equity markets and put it into fixed income. Now, the fact that we can do that change in a week through our investment committee, rather than a Host Plus or Australian Super, which you have to go through many months of work, it's sort of why this business was built, Paul. It was the fact that I want to be nimble and I want to be proactive, not reactive, and do the best thing for the client's funds, not just go through many hurdles and red tape.
Absolutely. Thank you, Clay. And that meant I've seen it, obviously over our relationship, I've seen those returns coming through and the quick movements that you can make over those past historic times as well. Now, there's another pressing question, one that you probably won't be able to answer accurately, but who's going to win the AFL flag this year? You being a New South Welshman, do you have any idea what else is going on in the football world around the country?
I've got more of an idea now from getting to know you over the years, but I come from a rugby union background. But I tell you what, and obviously I'm in Sydney, but this question came up the other day, and the most AFL games I've ever seen in my life is in Adelaide, and it would be, and I'm not just saying this because you're on the call. This is going to be a common answer if it comes up. But I should say the Sydney Swans, but I haven't seen a game ever from them. And so I would say the team I follow would be the Crows, and I think they're going to make the 8 this year. I don't know if they can take the flag, but they'll make the top 8.
That's all we need to do, and then we'll bring it home late in September. So,
Right, man. So that's good.
no, excellent. Thank you, Clay. That's we'll keep it short and sweet. So, like I said before, the idea is have a 5-minute sort of update each month. So, I appreciate you jumping online, and it's we look forward to it each month and doing it. And yeah, I'll take note of any clients' questions along the way, and happy to bring them up next month. So, thank you again for your time.
Yeah, thank you, and thanks to please jump on the phone anytime. Myself or the rest of the investment team here are always available for a call or any sort of Zoom call or jump on a plane anytime. So we're accessible, we're transparent, and we're here to sort of jump on these calls. So it's good.
Excellent.
Thanks.
Thank you.
Cheers. Bye.